A very good evening to all our viewers. You've tuned into News Now right here on ET Now with me, Stacey Pereira. Well, all eyes tomorrow would be on how HCL tech investors will actually react to the company's stellar set of numbers that have just come out some time ago. In fact, the IT major has revised its revenue guidance upward to about 13.5 to 14.5%. Meanwhile, they've also narrowed the margin guidance band. Let me bring in Anisha Jain now to give us a lowdown on all those numbers that we're seeing from both those IT companies. We've had Wipro some time back and now HCL as well with these numbers. Although on the two sides of the spectrum, one could say about these numbers, let's go with HCL Tech first since those numbers are just out.
Oh, well, yes, it's a tale of two cities. While Wipro managed to disappoint on mostly all parameters, HCL Tech is actually quite a bit of strong beat coming in. Let me start from the top itself, wherein the revenue profile in terms of constant currency came in at 3.8%, and that compares with an expectation of 3%. Even if you look at the rupee revenue, that jumped up by 5.2%, and we were working with a number of 3.6%. So a sizable beat coming on the top line. The dollar revenue growth is also solid at 1.9% versus expectation of 0.8%. The most positive part for me in the number is the fact that margin profile has improved considerably. So margin has come in at 18%, and that compares with around 17% that the company had reported earlier. And this has been a worrying point for the street. So 18% is something that the street will really like. Additionally, the other positive is the fact that TCV of new deal wins is at $2.4 billion, which is actually an improvement on a quarter-on-quarter basis. Even if you look at the attrition figure, that's remained flat at 23.8%, and the net hirings have actually improved on a quarter-on-quarter basis. We are working with a number of around 2,000 last time around. This time around, the net addition is 8,359, telling you that there is this momentum build up on the upside as well.
Well, so that's the numbers from HCL. What about, we also have our analysts joining in now. We have Omkar Tanksale, the Senior Research Analyst at Axis Security, as well as Mitul Shah. What are you guys making of these numbers? Let's go to Omkar first. How are you reading these numbers, Omkar?
Yeah, I mean, I believe they still have outperformed our street expectation, and especially in all fronts, whether it is for the revenue, in rupee terms, revenue in constant currency basis, and also the margin expansions that they have incurred. The EBIT margin stood at 18%. We were indicating an upside of 93 basis points. We were expecting around 63 basis points of margin improvement. The deal sheets have also came strong at $2.438 billion for this quarter, shows an indication of 16% Q-on-Q higher side. The revenue has also, the revenue guidance have also increased from 12 to 14% to 13.5 to 14.5% on overall the revenue guidance. Whereas services guidance have also improved much on a larger scale and stood at 16 to 17% guidance, which also shows an indication of the management confidence in the services pipeline that they have. They have also improved on year-end business, which is more than 5%, and also on our services, the platform prices, product and platform business, which is mostly business, have also declined some more part. But the good news is year-end services and the IT services both have improved more than 5% for the quarter, which is a good result according to me.
Okay, Omkar, so that's the word coming in. But the question, Mitul, is given this big beat, is it worth enough to increase the estimates on HCL Tech? Will there be upgrades tomorrow morning, you think?
Yeah, certainly there would be upgrade tomorrow because not only the revenue guidance increase, but even margin, though they have reduced it margin guidance, but 18% itself in coming in this quarter is really commendable, and street estimate was somewhere around 17.3, 17.4%. So there is a clear beat on margins front. In addition to this, there is a employee addition of 8,359, which is giving more confidence that going forward there would be higher deal wins, and this upgrade on the revenue will be primarily on the back of strong deal wins, which is up by 16% Q-on-Q and 6% YOY, 2.384 million, which is really great. And in these geography-wise, if you look at, there is a growth coming in from the Europe side compared to America. Europe growth is higher than growth from America, whereas everyone is feeling that Europe and UK is slowing down, but it is not visible in HCL's number. And even within verticals also, manufacturing growth coming at 10% Q on Q, which is really commendable, because as we all know that overall there is a slowdown, particularly on the manufacturing side globally. But this HCL has really outperformed on the vertical side as well as on the geography side.
Absolutely, Mithul, point taken. Let me take that point across to Mahantesh. Mahantesh, you weren't very excited with TCS's number. Is HCL Tech enough to excite you about the IT pack?
Yeah, I think HCL Tech has delivered very good numbers. There seems to be an all-round performance, and particularly what Mithul highlighted in terms of the European business doing quite better is a bit of a surprise on the HCL numbers. So 90 bips sort of margin improvement, deal win, strong deal win growth, and margin upgrade or guidance upgrade that we are looking at. Although it is slightly muted relative to what they have been doing in the past, 3 quarters ago or 4 quarters ago, I would still reckon that HCL has delivered a fairly good set of results.
Well, thank you so much, gentlemen, for giving us your time and getting us all up to speed with all those numbers. Let me get back to Anisha then to give us a breakdown on how Wipro